Hi, welcome to Curious Bricks. Today we're going to talk about ROST Store, ticker symbol ROST Q4 2020 earnings report. ROST is part of S&P 500 index under the consumer discretionary sector. The company's earnings call was hosted on March 2nd, 2021. Before we dive into the financial details, let's take a quick look at some key statistics. As of March 5th, 2021, ROST share price was $113, and its market cap stands at $40.3 billion. The trading price earning ratio is around 471. Forward dividend is $1.14 per share, or 1% yield. As of February 12th, the short interest of total floating share was only 1.3%. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q4 2020, ROST reported total revenue of $4.25 billion, which is 4% lower than the same quarter last year. Cost of goods sold increased by 125 basis points, driven by higher freight costs, merchandise buying costs, and higher wages through distribution centers. SG&A costs also rose 260 basis points due to deleverage effect from the decline in comparable store sales, higher COVID-related costs, and timing of incentive costs. COVID costs accounted for $40 million in this quarter. In summary, ROST reported total operating income of $383 million, which is 35% lower year over year. Now moving to the balance sheet. ROST further improved its cash on hand to a total of $4.8 billion in Q4, while long-term debt remained pretty much at a similar level as in Q3. Overall, ROST's liquidity looks very strong. In this quarter, the management provided key business highlights. The best performing merchandise was home, while Southeast and Midwest were the strongest regions. However, largest states such as California, Texas, and Florida significantly underperformed the chain average. dd's was less impacted than ROST. One piece of good news announced by the management team was the reinstatement of the quarterly dividend, which will be 28.5 cents per share. Next, the management team updated the 2021 capex plan, which would be $700 million in total. The company plans to add 60 new stores in 2021. Lastly, due to the business uncertainty related to COVID, the management only provided Q1 2021 guidance. Revenue is projected to be down 1 to 4% compared to Q1 2019. EPS is expected in the range of 74 to 86 cents per share. During the Q&A session, one analyst asked when ROST intends to re-accelerate to the prior pace of new store opening. The management decided to take a more conservative approach in 2021 and plans to return to the normal operating cadence next year. One question was asked in the cost drivers of the higher supply chain costs. Freight is the number one factor. Both domestic and ocean freight are significantly higher. Ongoing wage pressure and COVID will continue driving up costs in supply chain. The company predicts both the freight costs and wage pressure will continue through the year. Related to the prior question, one analyst asked whether the current West Coast port congestion would affect merchandise supply. The management is still seeing pretty great supply opportunities in the marketplace, but also acknowledge that the port congestion slows down some of the receipts coming to the country. Lastly, a question was raised on the specifics of the $700 million capex plan. The management responded that half will be spent on distribution centers and supply chain projects in general, 20% on maintenance and remodels of existing stores, 15% for new stores, and balance is in IT and others. A lot of maintenance projects were deferred from 2020 to 2021. Now let's take a look at ROST stock performance before and after the earnings call. ROST reported revenue of $4.25 billion, missed analyst expectation of $4.27 billion, and its adjusted EPS of 67 cents profit also fell short of the consensus of $1 profit. On the following trading day, the market had a negative reaction after the earnings announcement. Lastly, here is the latest summary of analyst ratings of the company. As of March, there are still 25 analysts covering ROST. While the vast majority of the analysts gave the rating of buy and strong buy, we do see a few analysts downgrade their ratings to hold. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.